Hello, Bay Area real estate enthusiasts.
We're excited to share our insights on the 2025 market trends and what we can prepare for. Our responsibility is to get this information into the hands of those that can use it so you can be confident and you don't have to guess.
With over 28 years of experience in Silicon Valley, I've weathered numerous market cycles, and I'm here to guide you through what we're calling the year of being healthier, like so many of our New Year's resolutions. 2025 is shaping up to be a year of transition. While change is coming, it's moving at a more measured pace than some might expect. The Bay Area, as always, dances to its own rhythm, often outperforming national trends.
Here are the key market indicators we plan on discussing in this detailed analysis. Interest rates, inventory, number of actual sales, prices, seasonal trends, and the impact of the new administration. Let's discuss those pesky interest rates. The consensus among leading national mortgage experts points to a stabilization of rates between 6.4 and 6.7%, signaling a new normal that buyers are gradually accepting. The Federal Reserve continues to tread carefully, striving to balance inflation concerns with economic growth. Zillow even acknowledges the difficulty in predicting exact rate movements. They guess rates might trend lower by the end of 2025.
It's crucial to maintain realistic expectations about future rates. The optimism for 5% rates by the end of 2024 is dissipated, and the initial shock of the past 2 years has subsided. Many potential buyers are now deciding they can no longer postpone their plans. The era of 2 to 3% mortgage rates appears to be behind us for the foreseeable future, if not permanently. Remarkably, mortgage rates have consistently averaged above 6% for the past 24 months. And for those keen on monitoring interest rate activity, keep a close eye on the 10-year Treasury yield. It serves as an excellent indicator of mortgage rate trends.
Talking about inventory, expect a gradual shift towards balance. We're projecting a 12 to 15% increase in active inventory compared to last year. This is good news for buyers who have been struggling with limited options. However, it's still important to note that we're still well below the 10-year average. Were you aware that over half of the home buyers are current homeowners?
This is where lock-in effect continues to play a significant role, with many homeowners reluctant to give up their low-interest mortgage and electing to stay in their current home. As a matter of fact, approximately 75% of homeowners with a mortgage have rates below 5%, creating a disincentive to sell. However, life changes will gradually motivate more sellers to enter the market.
In regards to home sales, we are also anticipating a rebound with closed sales potentially increasing by 8 to 10% year over year after the fourth consecutive year of the lowest national sales numbers in decades. This uptick reflects a combination of more sellers deciding to come to the market and pent-up demand finally being unleashed as buyers adapt to current market conditions.
Everyone's curious about home prices, and for good reason. In the Bay Area, we often see stronger performance compared to national trends. While experts project a 3 to 4% increase nationwide, don't be surprised if our region experiences more substantial appreciation. The national forecast is considered healthy and in line with historic norms. However, it's important to note that high prices and elevated mortgage rates have sidelined a significant portion of potential buyers. Surveys suggest over 100 million American households currently can't afford home purchases, creating a substantial reservoir of pent-up demand for the future.
In our unique Bay Area market, it's crucial to remember that tech salaries are approximately 20% higher than in other regions. This local economic factor could further influence our housing market dynamics, once again driving stronger price growth compared to national averages. In regards to seasonal trends, spring remains our peak season, with home prices gaining most of their annual appreciation occurring between February and June. Inventory used to peak around August, but post-pandemic, we're seeing inventory peaks extend later into the year, often into October and November.
While it's tempting to wait for lower interest rates, rising prices suggest that acting sooner may save you more in the long run, securing a home while locking in today's home price and gaining the future appreciation, with the potential opportunity to refinance and lower your mortgage later. That is a true win-win. Of course, the newly elected administration heading into the next 4 years is on pretty much everyone's mind. The Trump administration has signed an executive order aimed at lowering the cost of housing and expanding housing supply. This initiative primarily focuses on new construction, with the theory that regulatory costs account for approximately 25% of new construction expenses. Keep in mind that new construction is less than 10% of local sales. It's also crucial to understand that executive orders don't immediately go into effect. They must go through legislative processes and approvals. The interplay between federal initiatives and local regulations will likely shape the market's direction beyond 2025.
Let's talk about where the opportunities lie. For buyers, the increasing inventory means more options. The gradual increase in inventory is good news for those who have struggled to find suitable homes. While competition remains fierce, more listings mean more opportunities. For sellers, while competition may increase slightly, strong demand continues to support home values. Rising inventory doesn't necessarily mean falling prices, but could also reduce upward pressure on home values. Sellers should focus on preparing their homes carefully to stand out in a slightly more competitive market.
And for those interested in investment properties, 2025 presents some interesting opportunities. With the rental market slowing but remaining strong and home prices continuing to appreciate, real estate remains an attractive long-term investment. Stay tuned for a future video focusing solely on this topic. While we're not back to the unicorn market of ultra-low rates, 2025 presents a healthier, more balanced landscape. Remember, successful homeownership is more about time in the market than timing the market. Again, healthier is the best word to describe what's ahead.
That's a wrap on our 2025 real estate market deep dive. Remember, we are here to educate and navigate, not speculate and fabricate. If this video gave you valuable insights, do us a quick favor, hit that subscribe button, share this with a friend who's thinking about buying or selling, drop a comment with your biggest real estate question, or attend one of our upcoming seminars.
Looking for personalized guidance for your specific situation? Don't just wonder. Let's connect. Shoot us a direct message or contact someone on our team. Whether you're a first-time buyer, looking to invest, or considering selling, we've got strategies tailored just for you. Let's turn your real estate goals
Into reality. Talk soon.